As the markets fall both internationally and domestically, we wonder how far they can fall and where they may find support. That's something that Gary Glover has been researching for a very long time, and his reports and his annual blueprints have been exceptionally accurate. So it's looking like a mid-March low, as what Gary was looking at over the last couple of weeks. Last few reports, you can have a look at those to see. But we're up for the update. We want to see what's the latest and how he's analysing the charts right now. Is it earlier? Is it later? And to what point is he seeing that gravitational pull that we may turn at? Lots put on the shoulders, as well as some trading shares to look at this week. Gary Glover, bit of pressure on as the market falls. How are you this morning?
Yeah, no, I'm good.
Before the recording, I was saying to you that I take comfort in your reports because of the accuracy you've had over the last couple of years, and the timing has been somewhat incredible. And at the start of the year, when you were saying sort of a mid-March low, it just becomes stronger and stronger as we get close to it. Suddenly we wake up this morning, NASDAQ's off about 4%, the markets are down. So that's sort of the backdrop, and no doubt a lot of people will be worried, well, how much further can it fall? If we start with, if you've got any overarching comments, certainly, otherwise we can just jump straight into the NASDAQ. So what are you thinking?
Funny though, sort of like that first quarter weakness of the 50 years and also the post-election years, just a very dominant sort of pattern there. So similar to the October midterm year, that's sort of the 4-year lows as well. So it's a pretty strong pattern there. So even sort of as we're sort of starting to wind down here, I'll sort of go back and revisiting those March dates. And I've actually posted in the last couple of weeks the dates of the lows. And then I was sort of going back and thought, okay, I'll just go and look at what, so I think 80% of those March lows were the low for the year. And the 20% that weren't the lows for the year, they were the low for the first half. So we always got a meaningful bounce out of this March sort of sell-off there. So I think we had the earliest was like a 7th of the 3rd was the 95 low. And then I think we saw a lot of them around that 14th to 15th. That was probably the biggest cluster around that. I think 2 on the 14th and 1 on the 15th. And then the others are sort of probably a few late March and then a few early April there. And if you look at the post-election cycle, that actually, the average is sort of, I think it's maybe from a late January high to an early April sort of low. That's kind of so just sort of how long this correction pulls back you for and how far it can come back. That's probably the big question here. So I was just looking at the ranges and stuff there. So, I was trying to work out there. I mean, look, probably the biggest one was probably that Dow Jones that's kind of been the leader, Chris, as well. So that was the first one that expanded to 100% of the previous range. So, we're looking for that to sort of have that classic ABC, pull back into that range somewhere around sort of 41 and a half. So that's where I thought we'd come back to there. So just looking at that range, the way we set up there, the best probably, the key level there is probably that 50% level. Yeah. So that's the level we're probably looking for. So, because if you've sort of expanded 100%, you might pull back 50% of that expansion as well. That would be, sort of perfect to sort of come back to that level. So that's not far to go here. It's just a little bit lower here. So, we're pretty close on that as well. So I think even on the S&P, when we look at that, that's a similar sort of setup too. If we see that, I mean, that S&P 500 chart's been amazing really, because that every sort of, every high since the sort of the bear market, the GFC, that sort of 09 low, every high has been an expansion of that range, whether it's been like 100 or 150% or 200% or 250 or 500. So this is like the 500% expansion of that 07, 09 bear market. So every high since that level has been at a major expansion point. So it's amazing how those sort of, how the market, just sort of moves like that, sort of moves, I guess it's, even psychology, if you double in price and if you're half in price, that's sort of where, support looms or where it comes in there. So just again, the S&P has, like it's a 100% expansion of this previous range. It's 150% expansion of another range as well. And so if we pull back here, because this is expanded, I get 100%, that 50% level is probably the key zone there. And that's exactly where that line is, Chris. So in terms of the trend line for support there, so around that 5470 would be just bang on. So that comes back down to the bottom of the range. That comes back to the 50% of that expanded range. And we know that, all those expansions that we've hit in the past, they've held the market at bay for at least 6 months. So we're not going to, so when we hit there in might have been December, we know we're not going to go past that for 6 months. So it's going to be, we're looking at May, June will be the earliest that we might, pass that. So we need to sort of see a bit of a contraction, a bit of weakness here. So, so I think we're probably 80% of the downside's already complete here. It just might just be a little bit further to come. We'll come back to those sort of key levels there. So two things might occur here, Chris. We might, because the market's normally when you get like 1,000 point beat down in the market, from my experience, you normally get a bounce after that. I would normally buy something like a geared product after 1,000 point bounce, because I just know that's typically exhaustion and go. So can either I know like one or two things can happen here is you can have a bigger wide range down to complete the move. So we might get another big day down here. So that range has got to keep getting bigger until you find the low. So that could happen. So the low could be found here in the next couple of days, or we might get a bit of a bounce here. Maybe up 3 or 4 days, then come back, retest that low, go marginally lower, hit the bottom of the range, and that'll be probably in a better sort of timing spot. So, but I think we're close here. I think, to be honest, I think 90% of the damage is done here. So I just don't see it coming back to. There's a few growth stocks I think can come back a bit further. The financials now had a fairly decent correction. They might come back a little bit further here, but I don't think they're going to come back that much further here on this leg down here. So they've all had a pretty decent sort of move down here. So yeah, but yeah, interesting times here. It's interesting there. Just that the timing setup is quite strange here. Is that if we look at 35, 45, 55, which those markets there, we've actually followed that setup the closest in terms of the January, just a late December sort of January high, and then January low, and then February expansion and a March low. And that's actually one of the more bullish setups. Like that, those three markets, the low in March was the low for the year. They all expanded and kept going higher then. So yeah, I mean, I'm sort of thinking this is more like, I think the 15 and 05 with the periods there. I think it might be 15 as one that looks pretty similar there from memory. So, that's the one that sorry, not 15, 05 is the one that I thought that's kind of the roadmap I was looking for there. That was basically an expansion there to sort of come back, margin new low there, and then bounce there. So really bouncing back up to August could probably take us back up to the high once we find this low here. Then maybe pull back into October and then break through to a new high by the end of the year. So that maybe that's like 9 months before we crack the top there, maybe a bit, but keeps us within that sort of 6 month rule anyway. But we'll see. It's sort of just a little further to go here. I think maybe a tiny bit more congestion here, but I think for all intents and purposes, I think most of the damage is done here. Just be careful of the stock selection here. You're going to see some rotation there. Going to see some stocks will continue to keep going down here, and there should be some new groups that sort of start to show some strength there,
which is something we're very excited to look at. But you've got the trading shares for today. We'll look at the leaders at another time on a Friday recording. We want to look at the Aussie though. You've talked about, obviously there's a lot more data for the US, and you've been able to look back at the 50 years and the presidential cycles, US presidential cycles.
Yeah.
Flowed through to the US indices. we do have a connection to it, but obviously we're on the other side of the world. We have different currency, we have a different economy, we have a different political cycle. So with all of what you've just said about the Dow, the S&P and the NASDAQ in mind, what happens on the Aussie with that kind of research? How do you see the Aussie playing out?
Yeah, so we've already gone to, obviously expanded to a new high. Now we've expanded to a new low. So we're just sort of looking for levels here of where we might sort of see some support here. So that 61.8 level, 7843, that's probably the first level I thought we should be watching there. So again, I think most of the damage is done here. I think we'll see a bit of a bounce there soon there. Look, maybe we'll come back a bit further. Yeah, look, there's a possibility we might come back and retest the old high there, Chris. That's a possibility because oftentimes, you break to a new high, come back and sit on the old high, and then that's your reset for your bull market to sort of start again. That's a possibility. I just don't think it'll come back that far here. But I noticed this morning here, Chris, I think the low, if I'm not mistaken here on the index, is that number there. I'm just looking at it right now. 7843 is the low right now. So that's actually marked that level here. So yeah, a bit uncanny that we've sort of come back to that 61.8 level. So yeah, that's a level where we could definitely get a bounce from here. So yeah. But yeah, just could go slightly lower here, but yeah, I think we're looking pretty oversold here, to be honest with them.
Right. Okay. So you're not panicking. You're not throwing the portfolio.
Normally,
you're looking to add to it.
Normally, I'll be buying a geared long after 1,000-point Dow. Right. That's fine. Normally that's what I'm looking for. Just notice a few levels just look like they can go slightly lower. All the key support zones are just slightly lower here. So it's interesting how our index has probably hit the level here first. Instead, I'll be interesting to see whether we can hold that level. Next level's a bit lower here. But yeah, let's say like it'll be the second youngest in terms of finding a low pretty early in March, but doesn't.
They're uncomfortable.
Yeah, definitely. We know it's in the range there. It's definitely expanded out to that, key sort of zone there. So, yeah. So, we're just probably gonna be a bit patient there. Sort of probably try and find some good longs here. Just some stocks that are sort of showing a bit of strength there.
Well, we can look into the individual holdings because we already looked at the Dow. So if we move into individual holdings, you mentioned before about rotation. So we do know that it's very rare for a previous market leader, whether it's an Nvidia, Commonwealth Bank, whatever that might be, to lead through one market movement, one bullish phase, we have a reset, and then to come out and lead again. It's just very rare. Even if you end up having a gold leader or a lithium leader, it's very rare for them to sort of reset and then become that same leader once again. So we understand that you're looking at rotation. You're looking sometimes at those that have been underperforming, but then relatively performing better in creating higher lows. Can be a bit confusing, but the charts will explain that. So Myer, look, a lot of change there. We've got structural change with the brands, Premier Investment, or apparel brands. What about the technical side of things, and how does that fit in with your look on Myer?
Yeah, look, obviously the stock had a pretty good run up there. Obviously, a lot of the retail stocks have had pretty decent runs, so starting to see a few of them sort of cool off there. But it's a business that I think will be better longer term. So I think, with it's going to be a bigger business. It's going to be probably a more profitable business there with the JV. And I think, Southern Blue's got a history of making most of his acquisitions more profitable and improving their earnings. So I just think, this one here, I think, longer term is there's a fair bit of growth there. The stock's come back about 40%, Chris. So it's had a pretty decent haircut from the highs here. So, this is sort of ideal. So I was looking at technically, it's come back to the bottom of that range there. So on a weekly there, we've come back to a bit of a weekly support. And on the daily chart there was like a little descending wedge as well there. So I sort of had two technical markers there telling me that price was sort of tightening up in the side. And then it was interesting there, the last couple of weeks, as we've seen the market really come off, it was in the sort of in the stronger stocks there for, I think, 2 or 3 days out of the 5 there, the last sort of week or two as well. So starting to see a little bit of relative strength versus the market. So it was sort of going up as the rest of the market's coming off here. So, yeah, just like to sort of see those sort of stocks that are showing strength before, as the market, as the rest of the market's sort of, tailing off into a pretty deep low. The stocks that are coming out early, generally the good ones to sort of follow here. So, yeah, it's like this pretty interesting sort of, I've got a good starting position here. So one that hopefully if we sort of get a higher low sort of price tightening up there, it's one that I'll potentially look at adding there. But I like the volume as well. We're definitely seeing signs of accumulation down here as well. So just a few classic signs there that I like to see. Good technical support zone, bit of relative strength, and start to see some volume, some accumulation taking place. So, yeah, just need to sort of try and find a few more of those.
Well, hopefully time will tell, and if we see that market low, we can edge them out. But we've got a watch list here, and also on that watch list is Elders, so ELD. In that ag space, you have talked about ag space, soft commodities, and physical goods generally performing better in high inflationary environments, 40s and 70s, for us to educate us and us to learn from. You've also got A, B, C written down here. So I'm going to try A, B, C, and then we're sort of trawling out. And you've got FB on the charts. So that's false break, undercutting the low at the A. Is that what we're looking at?
Yeah, so it's sort of come back the 61.8% of the range as well. So a bit of a fib level to watch out for these sort of industrials. So oftentimes the 50% or the 61.8 is a pretty big zone, technical zone for some of the industrials. And so we've got a marginal new low there at our C wave, and then we got a bit of a bounce there. And that's kind of occurred when the rest of the market's been a bit weak as well. So we've shown a little bit of strength off that low here, while the rest of the market's been sort of getting, sort of dealt sort of negatively. And it has pulled back here, but the pullback's a bit lighter as well. And it just sort of see like a little bit of a bounce at the end of the week as well. So kind of looks like maybe a first high low setup as well here. Just volume profile looks pretty interesting. Got our completed wave structure there, maybe a first, got a false break and then a first higher low as well here. So just kind of liking the sort of setup here. Yeah, do think that the sort of that commodity area is definitely one to be watching there, and we're definitely seeing some positive signs in some of those agricultural sort of commodity prices as well. So, I think it's going to be pretty robust there with all these tariffs there. It's just going to add to price and stuff there for, which should be good for the
Total ticket price and margins, hopefully.
Yeah, just good for sort of ag, our guys across the board there.
Well, another one in the chart, Clinuvel, clearly a different space to agricultural and the pharmaceutical space. It is down here at lows. It doesn't look like it's fully rounded out and showed conviction that it has turned the corner, but the volumes are massively impressive, what's going on here. So what's your interpretation of Clinuvel, what it's doing and what the opportunity looks like?
Yeah, it's been on a pretty nasty downtrend for quite a while here. I thought the report was actually very strong. Actually, probably the strongest report it's had for a while. It has been a perennial sort of stock that makes a good profit every year. Keeps its sort of balance sheet pretty well controlled here. So it's actually a really well managed biotech there, but it's been unloved here for quite a while here. But they do have a few major sort of trials actually spanning out this year. So yeah, I mean, the growth was pretty strong this year, and there's a few catalysts there as well. So most of broker values are sitting way, way high here. But I love the fact that we actually broke above a swing high here, which we haven't done. So since July, so we've really broken above a swing low there, and we're seeing some pretty decent volume as well. So we've still got a bit of a descending wedge sort of structure there, but two things I like. I like the fact that there's some big volume coming out low here. I think it was a good report as well. And I like the fact that we've sort of broken that swing high as well here. So just sounds funny here now, just looking for a low risk entry, a bit of a consolidation and then come back here. So, yeah, I think this one looks pretty interesting here, really.
Nice. Well, staying in the pharmaceutical space, Neuren Pharmaceutical, NAU being the ticker. Different kind of chart in the sense that it's not perennial down, but it has still been trending down for over a year now. You're looking at the weekly chart, we've got the highs, your A, B, well, C was pretty long down here. And then you're showing relative strength on the chart here. You've marked that, which is in the context of our current year, January, February, March, haven't been the strongest on the ASX or the US markets. But you've now set up a higher low. How important is that higher low in the context of the market, just as you spoke about before, coming down to current levels?
Similar to CUV, really, because they've actually updated the market, had a pretty good update as well, pretty good growth there. And I know that a few analysts reports that they looked at basically sort of saying that their current sort of what's sort of currently in place there is sort of is probably worth more than the current valuation of the share price. And there's probably another 2 or 3 catalysts there for any use, either some new products there which potentially could get approved here as well, that are in reasonable development there. So it's got a lot of upside potential there. If they get a few wins here this year as well. So just sort of a few analysts sort of saying that there's potential catalyst there for some upside here, and probably looks a little bit underpriced here currently with what's in place there. So I just noticed it's had a couple of positive updates, had some pretty good volume on that last bounce as well, which I thought was pretty encouraging. And it's pulled back there, probably on lighter volume, but it's still pretty messy here as well. I'd probably like to see it tighten up, but looking for that little B wave break there, Chris. I hasn't got it here yet. I'm hoping this thing will tighten up here, like a little bit of a lower high in here, and then we'll break through it. But so far, we still haven't got that. So I noticed today we've sort of gapped down a little bit. We've still held the low in place, but I'm really looking for that lower high to be broken before I, jump in here. I normally sort of, even a failed B wave can actually go for a nice rally, but like you want to sort of see that little swing high broken before we enter here. So far there's no buy signal here yet. We haven't actually exceeded that little lower swing high, but definitely one on the radar here. Look, it was showing a bit of relative strength, even though today we're down. We're still above the low, which is good, but we have come back a fair bit here. So maybe looking slightly less impressive today than it was there last week.
Right. Well, Fineos Corporation, different space in the market, the software business and insurance segment. This is exceptionally tight considering the market that we've had. Obviously, we've moved a little bit today, and just quickly look on Iris to see, still within that range. So this still holds. That's the weekly, and it's still massively a tighter compression. If we were to rank compressions over the last, since the start of the calendar year, they're going to rank really, really highly. It's having this really tight range in comparison to a lot of the other markets that's been falling over. And we put this movement in the context of, we've got 1, 2, 2.5 years after that fall. So is this looking positive in the context of at the end of this basing pattern?
Yeah, no, it looks very constructive there, really. So, impulsive rally and then pretty corrective there. The update's been pretty positive as well. I think there was like a 7% increase in revenue. I think the margins actually improvement was more than double that. So it's definitely heading in the right direction here, this company. It's a pretty interesting model that kind of moving more to that sort of SaaS model. So I think, this one looks quite good here, really. So just looking for a little bit of a starting positive there. It's not the most liquid stock there, Chris. That's probably the probably the only negative I noticed there. So I wouldn't take it too big a position there, but I do like to look at this. It looks pretty constructive there overall. That's insurance segment's definitely been fairly robust as well here.
Yes, if we have higher interest rates for longer, that does help the whole sector. Their premiums seem to be going up. Well, if you've got a policy consistently higher, which does help their margins. But the other one is that if you're looking at ad spaces, it's either superannuations or insurance companies are the main advertisers on most commercial stations. But the banks, you've talked about the rotation. We've talked about CommBank multiple times about the high multiples, and most analysts in the country just look at it as defying gravity. NAB did have a different update, different report, did get absolutely whacked in that reporting season. So you've got it in your report. What's compelled you to look at NAB to the extent where you put it in your Tuesday report or your Monday report for your clients, Gary?
Yeah, just looking at sort of some of the banks here, because they're really been expensive for a long time here, Chris. So just finally sort of starting to sort of come back to some more reasonable type valuations there. So just looking at technically where when they've sort of maybe got a little bit, when moves get a bit aggressive like this, they tend to sort of come back to where the last drive sort of started. So you can see there we have that sort of classic sort of ABC sort of congestion there. And then you had a little bit of a pivot point out of there, sort of early 24 there really. So, and then since then, it's obviously, it's got, pretty extended, pretty overvalued here. So just think around that sort of, just under 33 there would be a pretty good level there. So I think, in terms of sort of trying to add some of these, banks in there, that's probably the level I'd be looking at there. So I think we're getting close here. We're probably, I think, down to 33.50 today here. So we're not getting too far away at all. So I think there's finally getting to a level there we can sort of start looking at these stocks again.
That's always positive to hear when so many investors are behind the banks. But when the analysts say, look, it's just historically so many standard deviations from the historical valuations that it's really hard to justify putting new money to an investment like that. Obviously, momentum trading is a different story.
Yeah.
But it's good to understand that from the bank side of things. And we are sort of seeing the market get hit pretty hard. We woke up this morning. When you're looking at the bank here, would that fit if we're sort of currently, I'll just draw it on here at this level, but it's more of a target down here a little bit further. Does that fit in with the narrative of what you're looking at from the blueprint perspective? Okay, we could just come a little bit further down for March. It could be a bit more. There could be some dramatic volume, a bit of a washout, a lot of capitulation. What are the sort of earmarks that you'll be looking for in the next week or two? Because we understand the time frame's right. The Fibonacci levels are looking very strong. So there's sort of those magnets drawing to the level. Things that you're looking at for, like a follow-through day or capitulation volume or leaders really giving it up. What signifies to you that we'd see that turning point?
Yeah, so that's kind of like a classic sort of 5-wave move there. And then we should have like an A, B, C there. So, come back down to this sort of 4th wave zone, you get a bit of a bounce there. So maybe that bounce takes us up to middle of the year, or maybe it takes us up to August, a lot of August highs, but now maybe this is going to be time consuming as well. But then sort of coming off there. So like maybe these will peel off, maybe the start of the year, or maybe they'll peel off later in the year, maybe between that August and October period. But yeah, it can take a long time here. I mean, this is a fairly, it's probably almost a 2-year upside trend here, really. And we've only really come off 3 weeks here, so it's pretty young here. So, but look, sometimes they can happen pretty fast here. But maybe the B wave up here will take a while. Maybe that'll take 3 months to sort of go back up, maybe 2/3 or 3/4 of the range or something, and then roll off again, maybe to mark that low later in the year. Then you're sort of complete there. I guess you sort of reset again. But yeah, it's a fair move back here, but which I think, to be honest, we've been talking about it for a while. They really needed to come back here. Banks got really, really overpriced. I've never seen them so expensive, really. 20+ years of stockbroking, I look at those earnings multiples, have looked at them for a couple of decades now, so they've never seen anything like it, really.
Well, that means that it's no surprise for you to see that kind of chart with NAB, the banks, the other banks as well, and gives some good comfort to know that this kind of research that you've put into not only the banks, the PE, the multiples, and the modeling of the cycles that you've talked about at the start really give us comfort to know what we're looking at in the market. So if anyone wants more research like that, there's a whole playlist we'll put on screen over the right here with that type of research Gary's consistently surfacing and then sharing with us little gems and chestnuts. And at that point, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.